Hello! This is Japanese Economic Review Channel. Today, we will analyze the indices of tertiary industry activity for February 2026. While the headline index shows a slight dip, a deeper look reveals profound structural shifts. We will explore the divergence between sectors and what it means for Japan's service economy moving forward. In February, the overall index fell by 0.4% month-over-month, marking the first decline in 2 months. However, year-over-year growth remains positive at 1.9%, sustaining a 23-month expansion streak. This suggests a temporary pause due to short-term adjustments, rather than a reversal of the ongoing recovery trend. Looking at the macro trajectory since 2021, the index has climbed steadily from around 95 to 106.3 today. Despite February's slight pullback, the overarching upward trend remains intact. This consistent 23-month year-over-year growth underscores the profound structural resilience of the Japanese service sector. A key divergence is emerging. Broad-ranging personal services, B2C, contracted by 0.3%, its second consecutive monthly decline. Conversely, broad-ranging business services, B2B, grew by 0.1%, continuing a robust 20-month year-over-year expansion streak. Corporate Japan's steady spending is strongly anchoring the economy. Analyzing the 0.4% decline, we see a tug-of-war. Retail and wholesale trade, along with utilities, exerted severe downward pressure, contributing negative 0.27, negative 0.24, and negative 0.21, respectively. However, these drags were partially offset by massive gains in the finance and insurance sector, plus 0.31, preventing a steeper overall drop. The primary growth engine was finance and insurance, surging 3.1% month-on-month. This was driven by a remarkable 11.5% jump in financial products and futures trading. Additionally, living and amusement services grew by 1.1%, fueled by strong demand in accommodations, plus 4.7%, and amusement, plus 2.9%, highlighting a shift toward experiential consumption. On the downside, physical goods trade suffered. Retail trade fell by 2.7%, heavily impacted by motor vehicles, negative 4.9%, and machinery, negative 8.3%. Similarly, wholesale trade contracted by 2.4%, dragged down by machinery, negative 4.7%, and building materials, negative 3.0%. This signals an acute cooling in physical supply chains. Another major drag was the utility sector, which saw a severe 5.3% month-on-month contraction. This was almost entirely driven by a sharp 7.0% drop in electricity generation. This reflects a localized infrastructural or seasonal anomaly, rather than a systemic failure of the broader economy. Mapping these trends, finance and information comms are in the surging quadrant, showing strong short and long-term growth. Amusement is rebounding, recovering its momentum. However, retail, wholesale, and utilities are contracting. This visualizes the structural shift from goods-based trade to service and finance-driven growth. To conclude, first, continuous B2B spending provides critical resilience, acting as an economic anchor. Second, a structural pivot toward financial markets and experiential consumption is driving tertiary gains. Finally, vulnerabilities in physical goods trade require close monitoring moving forward. Thank you for your attention. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.